Nation, what is going on? I'm here to make a video based on what a lot of people have been talking about in chats recently and what I think may be useful to you in the next couple weeks. And I suppose this video, in a sense, is the art of shorting, but it's also the art of reading the market. And at the same time, if you know how to short a market, you know how to long a market, very simply. And what do I mean by that, right? And I think if you've watched all my other videos, this should make some relative, there should be some bells that ring here. But what's important to realize is that, hold up, let me bring up my YouTube on the side, is when you're looking at shorting or even longing, there's a lot of questions that always people ask. Was that the long? Was that the short? Right? How can you tell? And the reason I'm touching my throat is because my throat's kind of hurting. So hopefully this doesn't cause any issues during the stream. But if you watch my video, watch many of my videos to be fair, but in particular my videos of timing your positions, how to get better, how to approach time frame, writing your story, stochastic RSI deeper breakdown. Those are relatively important videos, which are probably good videos to watch before this video. Now, when it comes to knowing fundamentally at its core whether you should be shorting or longing, or for how long you should be holding your short and for how long you should be longing, you might have heard me recently say on stream that the best way to figure out if you've actually shorted, quote unquote, the top, in a sense, and we'll use Ethereum in this example because Ethereum just is a little bit easier to use in this example right now, is very simply, you know, when you do, let's say you did end up shorting here at 39.40, let's say theoretically, right? One of the most important things you got to be watching out for is, number one, patterns inside the actual chart. Now let's go to a cleaner chart, to be fair, because that's kind of maybe too nasty for people to cover. So if you're looking at just at a very base case, anytime you end up throwing up a short, you know, because it's overbought 9-minute and maybe the 27-minute was overbought at the same time and blah, 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 whatever else, you know, indicators that were hitting for you. When you do end up getting that first initial short, whether it's at this peak or at this peak or at this peak, how do you know if you actually got the short? Well, quite simply put, is you're looking for, well, obviously a deeper pullback, but fundamentally, when you look at this overbought and then it finally goes oversold, wherever the oversold is, let's say it's over here, and probably soon enough it's going to be somewhere over here, you go look at the last time it was oversold, and the last time it was oversold was at 38.40 plus or minus somewhere around here, right? So in order for you to even be any form of bearish, any form that your short is actually the short, you would minimum have to go below 38.40 by the time you're oversold. And right now, this is going to be technically the third, but officially the second time, because you could argue that this was oversold, but we're looking for more zero stochastic in this situation. Where it's like, okay, is this price right now on this, especially after, you know, ideally it's on the first move, right? Ideally it's on the first move like we saw here. Doesn't mean we can't keep going lower like we just kind of did right now. But on that first move from last oversold, this oversold, there's clearly a bullish divergence, right? Most likely on that first move down, when you do end up shorting a top like this, if you're not lower, and to be fair, significantly lower, I'm not talking like you know, $4, $9, you know, type shit. You need to have it like seriously, like, you want to see that move, you want to see that volume, you want to see that action. Where's the volume here? Where's the action here? Right? There's none of that. most likely, if you short at the top here, it's going to fizzle out here somewhere, you know, and maybe it's at the bottom of the Keltner on the 1 hour, right? On Ethereum here, on the corner here, right? And you look, you can kind of just tell, like, you look at the stochastic on the hourly, yeah, it pulled back, and yeah, you know, you were overbought a little bit, and, you know, you did hit a RSI trend line. You know, there were some good, you know, opportunities to throw up a short there. But is this necessarily going to be the short outside of some random bad news that has a probably less than 5% chance of happening when you're in a short position? You know, say, I don't know, Trump suddenly dies or something, and, you know, the markets crash or something like that, right? Outside of that, you know, weird outside information happening, you most likely do not have the short. Remember a couple weeks ago when Ethereum hit 3,800 here, right? And we chopped down. It's like, by the time we got to oversold here, and you know, you can apply this whether it's on the 9 minute, you can apply this on the 3 hour, 1 hour. You know, you just have to morph with the time frames in a sense. But the last time it was oversold here was what was the price here? 35.20. The next time it was oversold, it was 36.20. Now, once again, it doesn't necessarily mean that that's gonna be the bottom. It might be the bottom for now because, you know, it was oversold stochastic. You know, the RSI was still bullish. I'm sure if we go to the hourly, it was relatively oversold somewhere around here. I forget what fucking time frame, but like, yeah, around here, 35.65, relatively oversold. Blah blah blah. Outside of many other indicators that you can, like, pretty much whatever indicators you use doesn't have to be mine, right? Whatever you're using, you're trying to find just some form of bullish and bearish divergences. But fundamentally, just looking at that 3 hour there, right, when it hit that 35.65, you know, it didn't go lower. Like, you know, it just wasn't fundamentally going to go lower there, right? If we go back to the 3 hour here too, it was even below the 100 EMA on the 3 hour, right? In order for something to go bearish, minimum, and this is from my other previous videos, you need to see it go at least below the 100 EMA on the 3 hour. And it can you can look at that from other time frames and so forth and so forth. But the 3 hour and above, if you watch my previous videos, that's what I talk about on the stochastics. That's what you want to see to be at least a little form of bearish. We did see that on Bitcoin, right? But we still had that 200 EMA hold, which has pretty much been the pattern that's been holding this entire time too, right? When Bitcoin was oversold here on the 2 hour, touching the 200 EMA, the last time it was doing that, fundamentally, if I have to kind of find it around here, where the fuck was that? Closer to here at 105K. Well, pretty clear bullish divergence, right? At least at that point in time, where you're like, is this the short? Should I keep holding on to my short? Is it going to keep going lower? No, probably not, right? I'm sure the 9 hour was relatively oversold or getting oversold around that period too, holding relative trend lines, holding Ichimoku clouds, blah, blah, blah. So this video is going to be relatively short and sweet, because if you have to ask the question, did I just miss the short? Was that the short? The answer is probably no, because when you actually do get a good reversal, a good move down, it's going to start on the low time frames fundamentally, right? The low time frames build into the higher time frames. If the 9 minute here, even if it does go to 38.50 here, or even 38.40, the last time it was like that oversold on that spectrum there, it was still higher in a sense, right? There's no real, you know, there's no real actual validity that this is most likely going to be the top. You know, you look at the 1 hour, you're like, it's starting to get oversold, unless something crazy happens and you giga. And the last time we were oversold here on the 1 hour was 37.20. You know, it's not really going to be that bearish, and it's probably going to continue upwards. And what you do want to watch for is that next, you know, and that could be a signal for you to long, right? If you know how to short, you know how to long, fundamentally, right? So what you want to be looking for is, and that's what I've been talking about, it's not about getting that, you know, you might get lucky and you might short the top on the first time, you know, it goes to 4K, and then it spikes really fast down to like 38, and then it spikes back up to 39, and then it starts creating this kind of like bearish channel, right? Or downward channel, or whatever the fuck you want to call it, right? So the whole point of timing the short, timing the positions, finding your position. It's just asking yourself, is the RSI more bullish? Is the stochastic RSI more bullish? Is there a pattern, right? If the bears wanted to turn this into something of a bearish move, we would slow bleed up, which is unlikely in these situations, get back up to the overbought, maybe just do a double top or a slightly, just slightly above, in a sense where the stochastics can get re-overbought, and then maybe there's a chance, right? Maybe there's a chance that that's the top. Maybe there's a chance that that's actually gonna like try to push down here, and so forth, right? But fundamentally, just kind of looking at it, like looking at the 27-minute right now, it's like, what happened last time the 27-minute was oversold? Well, the price was lower. So then the price is higher now. So unless something weird happens, and most of the time it doesn't, what's it going to keep happening? You're going to bounce back up, right? The entire week or over the weekend, middle of the counter bounce, middle of the counter bounce, middle of the counter bounce. Now, to be fair, we didn't do a middle of the counter bounce. We did do bottom of the counter bounce, but it's not the end of the world, right? It would have been better from a bear's perspective to fall out of the counters and then bounce into the counters. That might set up a harder push for the bulls to, when they do go back to overbought, maybe it'll post up a lower high, right? Maybe it'll just slow bleed upwards instead of rocket off outside of a V bottom and like kind of slow bleed, and then it does one of these, right? And you're like, okay, now we got a bearish divergence. Now that might be right there a short that you'd like to maybe hold, because if it goes down the next time and it ends up lower, than the last time it was oversold, right? Let's say so 38. Let's say it ends up at 38.50 or whatever. You're like, oh look, maybe the bears are gonna make a move. Sometimes markets move really fast and you can snipe the top and it's like great, life is good. But most of the time it's a slow grind, right? It's a slow and steady grind to find the bottom. to find that move. I'm sure if we go all the way back a couple months ago, right, you would notice that we hit that 21.75 oversold. What happens the next time we were oversold? Oh, we were higher. That's weird. What happened the next time? Mostly higher. Like you can plus or minus like 1 or 2%. It's not going to be the end of the world, right? And it's like, oh, we kept higher oversold. What the fuck do you think is happening? Well, it's getting more bullish. So maybe you shouldn't be shorting, or if you are shorting, you got to be taking profit faster, right? Just because something's oversold doesn't mean, overbought, my bad. I think I said oversold, overbought. Just because something's overbought, we can pull back, and by the time it's oversold, it's 37.20, and the last time it was oversold was 35.30. Bullish divergence. What do you think is going to happen? It's going to go up, right? So it starts on the small time frame to kind of figure out, okay, just very short term, was that the short? How confident can you be that if we got this move instead, hey, structures were broken, patterns were broken, whatever was broken. Hey, there's a chance that this short that I'm holding is most likely the short. But in this case, it wouldn't be, and you should think about taking profit if you shorted the top there or whatever. It doesn't matter. You can just do side by side with another chart, XRP, whatever. See if there's any lined up similarities, and just take it from there, right? That's it. It's not that hard. It's actually fundamentally really easy. You just have to believe in yourself fundamentally. 5 or 10% of the time, maybe you'll end up being wrong, and that's, just weird things happen on the market. No one can predict it perfectly, right? But fundamentally, if you're holding a short and you're always you end up round tripping it, this is why I tell you, it gets to a certain level, okay, the 1 hour is getting a little oversold, the 27 minutes oversold, I should take profit here. At least 50% of my short. Maybe I'm wrong and something weird happens and the market keeps bleeding. At least you have some of your position open than none of your position open. You know what I'm saying? But it's way better than opening up a short here or here or here or here and being like, you know what? Actually, it's not that bearish. Why am I holding on to this position? Don't hope that your position works out. Know that your position is going to work out as much as you can, with 90%, not accuracy, but feels, right? So if you know how to short, you know how to long. This is what I've said for years, right? How do I know? How did I know how to long chain link at 1733 a few days ago, right? Well, it was pretty simple. I was holding the bottom of the Keltner, posted a double bottom stochastic RSI. Last time it was oversold was, well, pretty much the same price. Felt like a relatively good bet, and here we are right now. What should I do about my long here? Probably take a little bit of profit. It has been overbought for a little bit, to be fair. Is there a chance it pulls back a little bit more? Maybe, but does it pull back all the way to 1733? Probably not. I don't want to close the whole position, but just in case, you want to take little bits, 20-30%, right? And that's the next thing. In what kind of market are you in? Are you in a bull market, or are you in a bear market, or are you in a bullish movement or in a bearish movement? Forget about the market. What kind of movement are you in? I am in a bullish movement. If I'm in a bullish movement, I should be taking more profit on my shorts and technically less profit on my longs, because I expect the longs to keep going up higher. Nobody knows the future. Always want to play a little bit safe, 20-30% off the top, especially when it gets to like 3-hour overboughts, 9-hour overboughts, because when what happened last time, kind of the 9 hours got overbought. Yeah, we went a little bit higher and then we pulled back, right? Maybe now on the 9-hour, we're actually setting up for a bearish divergence. If by the time the next 9-hour kind of, not escalates, flatlines up here and it pulls back down, maybe now we're starting to see that bearish divergence to show up. The same thing that I pointed out with Ethereum a few weeks ago. Hey, when we topped out over here and pushed back to, this is Chainlink, but same thing applied here on Ethereum here with that RSI trend, right? Higher price, lower RSI. Okay, that's good. That's good from a bear's perspective, because that means you're getting a higher price, but less people are interested, or less people have the same energy as they did over here than they do over here. Even though the price is higher, people are not as excited to buy at this price. You can clearly see it, unless there's like a break of RSI trend here in the next, whatever days, and suddenly we do something like this, and then next thing you know, you're at 4.5K, which is something you do have to keep a watchful eye for, because you are still in a bullish formation, which could turn into a bearish formation, into a bearish move. So if you're in longs, you want to take you want to take profits, but in a bullish move, you want to take less profits in a sense, because you want to, not a sense less, but less as you go up. And for shorts, when you notice, hey, you know what, this Ethereum short right now, it tried to push down, and maybe it will push down a little bit later, but I should probably take 50% here, or 30 to 50%, and then if it tries to go back up, I can at least add on to I can either consider adding on to my position. If I just by the time there, the 9 minutes getting super overbought and blah 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 blah, right? And then you could be like, okay, maybe I should add on after I already took 50% here, right? It's all just about strategizing your play too. And that's it, right? Keep it simple. It's not too hard. See what the setup is. Is it a bullish setup? Is it a bearish setup? If it's a bullish setup, long your longs unironically and cut your shorts. If it's more of a bearish setup, hey, let's see how I can keep this going. How long can I keep this position going, right? Suddenly a scalp trade can turn into a swing trade, right? It can morph from one to the other, right? So that's it for this little video. I hope it helps you. I hope this explains it a little bit better. And if you want, make sure to sign up for BitUnix. There's going to be a trading tournament coming within the next week. Last time it was $20,000, $5,000 for first place. So if you guys are interested, feel free to use my referral code VRFX. And that's it for today. If it makes sense, if you have questions, leave the comment down below, or put it into Ask BNC Questions in my Discord, which by the way is free. Come hang out, come chill out. I'll see you on the flippity flip. Take care. Brush your hair, scrub your scalp.